Hi, everyone. This is George Hedden, founder of Pause Fest and Awards, and you're tuned to Breakthrough Sessions 2024. We're all about clever ideas that push boundaries, and for the past 6 weeks, we brought you some of the sharpest minds in the business to talk what's happening right now. Every Friday from September 6th to October 25th, which is today at 1 p.m., we're live for 30 minutes, just enough time to give you some serious insights without pulling you away from your busy day. So this is our last session, everyone. Thank you for being here. So let's dive in, get inspired. Most of all, let's break through together. Today's session is financial power of brand and why it matters in context of M&As. Explore how strong brand equity can significantly influence mergers and acquisitions, driving value and shaping successful corporate integrations. The keynote today is by Sérgio Brodsky, Chief Strategy Officer at Sergio, an award-winning brand and foresight consultant with international experience as Executive Strategy Director at Landor and Board Director at Rednose Australia. He contributes to the World Economic Forum, has produced Futurecast, and authored Foresight and Marketing Research. Well, Sergio, take it away.
Thank you, George. Thanks for the opportunity, and lovely to see a few of the blocked faces, the dark cameras, but I know you're there, so you hear me and you hear this funny accent. Let me start by sharing my screen so you can see what I have to show. Can you all see my first slide? Yes.
Sure.
Very good, very good. So like George said, this is about the financial power of brand and how to unlock intangible value for superior returns. And before anything else, just saying hello to everyone. Surge Advisory is our consultancy that I run with my business partner, Gemma Hunter. And we are very much specialized in the space of financial investment groups, family offices, private equity firms, but we also work with agencies, other consultancies, and companies of all sizes and shapes whenever you want to unlock the intangible value of your business. And on that note, our promise to any client is that we're going to be able to unlock the financial power of brands, teams, and the unimaginable. And this is because we also have an expertise in strategic foresight. We do that by combining practical experience with academic rigor, cutting-edge data analytics, and a lot of creative flair. We're also nice people, so it's often a joy to work with us. That's what we keep hearing. You will be able to be a better judge on that, though. Now that I finished my sales spiel, let's get on to what matters. This is a very interesting book that I read almost 20 years ago. It's called The Immaterial. And I was, back in the day, I was still a lawyer. I specialized in intellectual property, the dark side of branding, just protecting, not so much creating, bringing the light. But my learning was exactly what it's saying here, that value is increasingly about, the immaterial things, not the things that you can hold, not the things that you can weigh, but things that you remember, things that you pay attention to, things that you talk about, things that mean something to you. That's fundamentally it. And since then, the economy has been dematerializing. You see the data points here. 1/3 of machinery is now being rented. 80% of infrastructure is also rented. A third of industries resources also coming from other sources, which then brings the question: so where is the value? The value is intangible. When we look at the S&P 500, up to 80% of the total value of the 500 most powerful companies in the US, listed companies, is based on intangible. What is this intangible value? Amongst many things, brand is one of them. Your people as well. And this also matters for every single category, as you can see here. From all the way from customer service to pharma, to energy, materials, the most boring categories that you can imagine, defense, aerospace. The brand also has a value, and it's been measured. It's not my opinion. It's the data that is saying that. My opinion just make it matter more to you, so you know what to do with that. However, creating value is very difficult. It's very hard. Startups, they will often die in the first 4 years. Scale-ups, they can't sustain value beyond 5 to 7 years. And join-ups, M&As, they will usually die after 3 years. There's been a lot of research about that. And what was found was that These transactions, whoops, I don't know why this is moving so fast. Let me try to go back here. A bit jumpy. So all of these transactions, they often focus on, the deals happening, the operational elements of that, and the financials, not so much the intangible side of things. What is the shared narrative that will bring everyone together? This is often an afterthought. And this is the types of briefs that I've received throughout my life, throughout my career, when an investment fund or, when, you have like 7, 8 companies coming together to make the deal happen, and then they need a narrative to bring everyone together so people know who they work for, who's their customer, who are they reporting for, who's paying them. That's internally, and then externally with your customers. After this convolution of companies coming together, how do you communicate yourself? How do you express your offering? That's where brand plays a really important role, and it's often an afterthought. And brand drives value from the inside out, beginning, by the fact that there's been research that PwC conducted almost 12 years ago and still stands, that 82% of the companies that take a brand-led approach, they outperform other approaches. They do that by combining brand with culture, making people an extension of those principles that they define as being their brand, their vision, their values, their value proposition, and their mission, and all of those other associations that they create, and that create an imprint in people's minds. And again, models were created for that. But equally important, brand also. I'm going to use.
So if you have 100 places now, it's going to be.
Yeah, it's a bit jumpy, so I'm going to use this format instead, if that's okay. So as I was saying, brand also builds value from the outside in. And this, this is what you see, what you smell, what you hear. And this creates an imprint. And by being able to consistently employ your brand across the most various touch points, from a coaster to a uniform, to an ad, to your name, these are all the touch points where the brand is present, wherever you can see it or feel it or listen to it. You're also going to be adding value to the bottom line, right? As I put here, by consistently using your brand across various touch points, you can increase revenue in up to 23%. So this is a lot of intangible value that can be unlocked and translated in financial terms. However, many companies just think that they don't need it, or they can live without it. But there will be a point in time that your business is so strong, so appealing, that someone else would like to buy, or someone else would like to join with that. Or maybe you would want to sell, get rid of that, have an exit strategy. And this is when brand becomes important, because many of the questions assessing on the due diligence of that business may come down to your brand. Many of those capabilities can be seen on a spreadsheet. Many of those capabilities may not be there because you're not communicating. And some companies fail because of that as well. They have capabilities that they are not able to communicate, or they cannot communicate in a compelling enough way. So what then? Well, what it implies is that, according to my son, Aristotle, the original gangster of the Sigma phenomenon, is all about summation, right? Sigma, the Greek symbol, is about summation. It's about bringing things together. And that's an M&A. You have 2, 3, 5, 6, 8, 9 companies coming together to form just one entity. And to make that happen, to create that glue between all of those entities and capabilities and skills and cultures and narratives, what you need to do, is what I'm putting inside this red circle here. The job is simple. 3 things. You need to persuade investors. You need to engage your existing employees and attract new talent that will be able to drive the business forward, with your new proposition, and then connect with current and future customers in the most meaningful way. All of that through a shared narrative. All of that through your brand. It's not only by harmonizing your financials, harmonizing your tech stack, and the operational layer of those many entities that you're going to succeed. No, this is a very important part of the job. But like I said before, M&As, they fail from 70 to 90% because these are the only considerations. They are important, but they are not the only ones. Brand is equally important, but often happens to be an afterthought. Let me try to move now to full screen. Hopefully that will be fine now. Let's jumpy. Yes, all of the parts coming together for that. And if we dissect, what is brand? What is the secret sauce of brand? What makes a brand be what it is? What creates equity? There are essentially four factors, four elements. If we slice, someone's brain, because a brain lives inside someone's head, not outside, really, is when you remember, when you pay attention to that. And that's, what Warren Buffett also said. A brand is, the most valuable piece of real estate, which is the corner of someone's mind. So these four elements, they can be split into understanding and reputation, which will then help you assess your current performance in market. And then for future performance, leading indicators of business performance will be utility and uniqueness. Understanding is not awareness. Awareness is simply knowing that you exist. I know that George exists, but do I understand what he does? Do I understand what he offers? So I can consider him when I have a need for the thing that he offers. That's understanding. Reputation, often associated with quality, good or bad, it's a composite type of factor, but, quality is the main association to that, good or bad. Utility, is it solving my problem? Is it relevant for me? Or is it helping me achieve an ambition that I have? This is, useful brands will do that. And then uniqueness. How unique are you in comparison to your competitive set? There is no, absolute uniqueness. There will always be similar brands. There will always be brands that you can substitute with others. But uniqueness differentiation is critical, and particularly to drive investor appetite. The most differentiated brands are the ones that drive the highest amount of investment. And I'm going to show you how and why it happens. So let's go one by one, and I'm going to share a few case studies that represent that in the context of M&As. Beginning with the Australian Education City, that was actually a client of mine. Australian Education City was a consortium of 8-9 companies, really, really big companies. IBM, Cisco, Jacobs, and a few other massive conglomerates coming together to develop this concept of a cognitive city, of a city that is the next iteration of smart cities. If smart cities became, this big robot controlling people's lives, cognitive cities, as the next iteration, they want to fix that. They want people to basically dictate to technology how to behave, not the other way. But the name Australian Education City was very confusing, because this proposition is not about education only. There are many other things. And AEC, the short form for the name, also has a few negative associations, such as a political party in Australia and a few others that have nothing to do with creating a global innovation district. So understanding was a big problem. We renamed this company, we rebranded this company, and 5 days after this was shared, the first investor came to bring a check to Cition. And Cition was the new name to this enterprise. If you go to cition.com.au, you will find it. And if you're interested, give them some money. Could be a good investment. So understanding was something that was critical to allow for this company to be formed and start gathering investment to come to fruition. Otherwise, they would have still been stuck. And that period of being stuck lasted for about 7 years and almost $80 million that were invested with no returns. Brand was a massive roadblock, and we fixed that. Another one with Disney and Pixar, which is awesome, often considered to be like a best in class in terms of M&A. And that was something that made Disney a lot more useful, a lot more relevant by bringing Pixar to them. Was a massive shift from this innovation from the traditional 2D animation that Disney was very famous for, like Lion King, and won all the awards and all the fame and all the fortune with that, but to doing a lot more, becoming more useful, being able to conquer a new share of the market with innovation in animation technology and emotional and character-driven storytelling. That's exactly what Pixar brought to Disney. And the results are here to prove that. over $14 billion in box office revenue growth since the merger. In 2022, Disney reported earnings of $28.71 billion in total revenue in the media and entertainment segment, and then another $7.4 billion from theme park integrations, and integrations by bringing the characters, bringing the Pixar brand to the fold. That's how they brought more meaning. They expanded the appeal of the brand. Between 2006, the merger, and last year, the Disney stock grew by 300%. Pretty massive, right? And the brand valuation from $27 billion to $61 billion. The graph that I have on the right is just an aggregate composite of like several different companies that were assessed and where utility was proven to drive market share. So something important to consider. The next one, reputation. This is an image that I chose because it has been circulating on LinkedIn and with a lot of comments, a lot of people liking or not. So, you know, it's interesting. It's part of the popular LinkedIn culture now. RX Bar. RX Bar is a product that was created to be a health food, you know, a healthy bar, but was ignored for years. RX Bar was a product that, you know, no company was really interested, not because there was anything fundamentally wrong with the formulation, the manufacturing, the distribution, or anything else. But looking at something that was prescribed by nature is as meaningless as many of the taglines that we see around that are very formulaic nowadays. They choose your way, do it your way. They have this formula nowadays that is very salient. So as prescribed by nature was something that didn't come across as being reputable enough, as something that I can trust. Is it going to be really good? Is it that healthy? Or maybe it's just saying that it's healthy, but it's full of sugar, like so many of these health products. So they did a brand refresh, and instead of, you know, using this quite esoteric type of tagline, they actually put the recipe in front of the bar, describing exactly what were the ingredients that are inside of this bar, and the last line, no BS, right? That completely changed the confidence of the market, and Kellogg's approached them with a $600 million offer to acquire that business. That was a story where reputation as a lever of brand made a huge difference for a large transaction that was. So something to be aware of. Last but not least, uniqueness, right? And Warren Buffett, as the Oracle of Omaha, always says that the single most important decision in evaluating a business is pricing power. And brands that are more differentiated, they can command a much higher pricing power than brands that are less differentiated. Because what people pay for is that story, that feeling, that impression, that know-how, the kudos that I'll be able to share with others because I'm wearing this type of brand or because I'm consuming that type of show. And I'll be able to say something about it that to me has value, and I'm willing to pay for that. And in fact, you know, when we look at Leo Messi, which was the most expensive sports transaction ever, Barcelona acquired him for $674 billion. That's insane. He would never score that number of goals. He would never win that number of games. He will never bring, you know, like tangible benefits in that sense. But the intangible value that he has through his sponsorship and his image is something that added a lot of value to Barcelona as well, which justifies this transaction. The same goes to Neymar, that, you know, is also a soccer star, but not nearly as accomplished as Messi. But still, Neymar was the biggest transaction of this past year when Al Hilal bought him for $207 billion US dollars. So massive transactions based on their differentiation. Messi, in a world where, you know, athletes became bad boys and he's the good boy, he's an example. He's, you know, UNICEF partnered with Messi to have him as the sponsor. Neymar, you know, maybe because he's a bit of a bad boy, a lot less, but nonetheless has a differentiated, a unique image of a party guy that, you know, is quite differentiated from others too. with his own style, his own type of music that he likes, and brand partnerships that emphasize his uniqueness in his own right. But uniqueness, as I said, is if there is one thing to pursue out of all, uniqueness would be the one. Not to say that uniqueness should be pursued at the expense of the other three factors. All of them matter, but uniqueness is a huge predictor of future success, right? Deloitte even says that more differentiated, more unique brands, they will gain market share a lot faster than those, that are at a suboptimal level, not very differentiated, and very much of a commodity, right? Which is the case of this brand here. I don't even need to tell you the name. I think just by looking at the font, the typeface that they use, you can identify who they are, right? So Tesla, from when it was founded until last year, had a 13,000% stock price increase, driven by its uniqueness, by its differentiation. It's the most unique brand in the world. And, for the good and the bad, whatever Elon Musk does is also very unique. There isn't anyone else in the world behaving like him. And that contributes to the brand as well, by default, by creating this halo effect. So, proof's in the pudding, right? Whenever we do a project like that, whenever we run like a brand refresh, a brand revitalization, what's the outcome that you can expect? What is going to be the return of my investment? These are some averages, looking at various projects across various categories. And, particularly if your brand is at a suboptimal point, or, if your brand is already at a strong point and what it needs is just some fine tuning. And then if the category where you play in has a low role with brands, such as energy, for example, it has a role, as I showed you in the very beginning, there is value, but it's a lot less than, for instance, a fashion brand that expresses my identity. For instance, my energy provider doesn't really say much about me, says about other things. Potentially, if they are very differentiated in relation to the environment, maybe that could have an effect to me and increase the value, the role of the brand as well. But, these are the sorts of returns that you can expect in these types of projects, which can be quite significant. If you have a company that is worth, $150 million, and let's say you spend $200,000 on a brand revitalization, giving you a $15 million return on that, on revenue, incremental revenue. That's pretty massive, right? It's an investment that you could easily justify to your CFO, to your CEO. And that is true, to every type of dynamics. It's not just on business to customers, B2B, business to government, and business to nonprofits. And what you see on this graph on the right is, it was taken directly from a study about the effect of soft power, how regions, how places have an impact on the products that are manufactured in those regions, such as, perfumes in France, or outfit suits in Italy, right? And from that research, what was found is that every 1% of net increase of positive influence, so the more I like France, the more French cosmetics are going to be worth. It's true. So every 1% increase in positive influence creates this positive commercial output increment of around 0.8%. So people will buy more from that product because it's from that place. So in the end of the day, it's a content container relationship. The brand is what's inside, is what gives you the meaning. But if it's a business, if it's a person, if it's a place, it doesn't matter. If it's government, if it's a nonprofit, the rules of the game are the same. Those four factors, utility, uniqueness, reputation, and understanding, are still true. And they are the ones that are going to create equity, that are going to create intangible value. The three things that you should always do in every single brand project to ensure that this happens is be thorough about really understanding the problem that you have at hand, or what is the actual opportunity that you can embrace, that you can seize and pursue. And that is your diagnostics. That's 33%, a third of a project is really understanding what are we here to do? What is the job to be done? Once you know that, what would be the most cost-effective strategy? Strategy is not a science. The word strategy comes from Greek, which means strategos. And the meaning of that is the art of the general. So it's more of an art than a science. And there are many components to be analyzed when defining a strategy. So strategy is as important as your diagnostics. And then when you know what to do, it's how you do it. It's how you implement your solution, your strategy, your tactics. They're all equally important. And I put here, they're all, multipliers. So if you get one of them wrong, if one of them is zero, well, whenever you multiply anything by zero, result will be zero. Something will be wrong because either you didn't invest enough in research and you don't quite know what is the problem, or who exactly am I serving? Who are my audiences? What do they like? Will my brand resonate with them? Are these messages right? Or just because this is what's hot on TikTok now, I should copy? Not really, right? And the same applies to everything else. And importantly nowadays, and just as a closing remark here, meaningful brand advertising, for instance, has gotten 220% more cost effective than just following trends. And this is because everything is becoming a sea of sameness, much of a muchness. There was a recent piece of research that it actually shows the cost of dull, boring brands that don't mean anything, brands that are just the same. I'm not telling me anything different, anything unique, anything that I understand in a new way. They're all losing value, and they're all becoming more and more expensive to sustain. So if you don't invest in your brand in the medium to long term, it's going to be more expensive for you to keep it relevant, for you to keep it in people's minds, pretty much. Not only because ChatGPT is homogenizing culture. Globalization has been doing that for 20, 30, 50 years now. So it's very much the eye of the storm. And if you want to survive from this eye of the storm, build a strong brand. This is my message. And as a final closing remark, that's what we believe. Don't sink, surge. Let's talk. If you have questions, comments, I think we have a few minutes here, George. Hopefully that was an enjoyable session, and I'm open for questions.
Excellent. Thanks, Serge. That's right on time, 30 minutes, but we can stay for a few questions. There was a lot to unpack there. Maybe while we're waiting for the questions, and if you do, you can just put it in there. I wanted to ask you, I mean, also being a bit of a brand guy, not so much from the strategy, but from the execution and that standpoint. And brands tend to kind of invest, and a lot of companies are run by financial departments. So when you start talking about marketing and brands, that's like no, that's not important. And so, what is your view there? Why is it such a friction from some even established companies investing in brand and brand awareness? Why they don't see the value?
Yeah, because we don't communicate the value. I think it's a friction that has been happening for at least a decade now. It's the ongoing debate, the CFO versus CMO, and it's not about more budget for more advertising, more budget for more media placements, more budget for my brand to look a bit nicer. No, it's more budget because it's an investment that will give you returns. This is the language that we need to speak. I didn't really talk much about creativity. If I did, I would put a value to that. And I know from research that there is a value to creativity, which is 11. The most creative brands on the planet, they are 11 times more profitable than those that stick to the baseline. And this is a research from the IPA. So even creativity has a value. When we talk about the power of people, when you look at organizational cultures, people are a massive component of the intangible value, which represents between 30 to 50%. So if marketers, brand consultants start talking about value in this way, the friction goes away. And then we can start transacting and hopefully profiting.
Thank you. I had last week, chat. I was South by Southwest with Rose Herzig, president of WPP. We talked about the global state of creativity and especially now in AI times, what that's going to do to businesses and business models. So what's your thoughts about what opportunity can brand have in this AI revolution sort of age?
Yeah, I mean, it's very topical. Just like I've mentioned before, those four factors that create brand equity, they still apply to AI. And AI is possibly the largest opportunity we have nowadays in relation to branding, because AI is very tricky, almost like energy, right? Because when I turn on my Netflix and I see the menu and I know exactly what I want to watch, great, the AI has done its job, right? So when AI works, it's invisible. When it doesn't work, I can tell. And when it doesn't work is when I have a very negative memory and will possibly change my provider, my streaming provider. Because if I'm spending more time to choose what I want to watch than actually watching it, and that's what happened to me almost 3 weeks ago when I switched from Netflix to Amazon Prime. I know that the AI is not doing a great job. But how do I choose what AI I want? Right now, it's like is a choice that is made by default. If I'm a subscriber of Apple, I'm using Siri. If I'm a subscriber of Microsoft, I'm using Cortana. I'm using Copilot. So AI brands now, especially from SMEs, and there are plenty now that could be, go head to head with an NVIDIA or OpenAI. If they build strong brands that means something, they will have an edge, because at present AI is as much of a commodity as energy, water, or currency.
Yeah, there's a lot to be seen. A lot of them don't quite work yet well, and how they incorporate it in a core business. We have Jonathan asking, what's your opinion if Elon Musk is creating value or destroying it right now?
Uh,
He's very opinionated guy.
it's a very good question. I mean, he definitely destroyed a lot of value with X. But who knows? We are only looking at a very narrow slice of time. X, could have so many ramifications, could unfold in so many interesting ways, particularly if Trump wins the election and we know how close they are to one another. Musk could be someone able to generate a lot of value. As in relation to his own brand, his personal brand, we know how much money he lost from some of his bad decisions, from some of his negative tweets or negative comments, or even stupid comments that he made, and he lost a lot of money through that. So a lot of value was detracted, not because he's done something like something actual that could be measured, but because of the story that he created. Once again, the intangible value of that. And we know that stock market is all about the stories, the madness of the crowds. So yes, he eroded a lot of value, but once again, someone like him could create a lot more than he's ever made up until now.
Yeah, he's Sergio, you mentioned some key pillars for brand, the ability to engage and connect included. Should can we delegate these abilities to AI?
Why not? I think that any type of automation that makes my life easier is something that I would welcome. So automation is not, I mean, it's just a fact. It's not a fact of life, it's a fact of industry. Since industry has been invented, it's all about automating a bit more, freeing you a little bit more from having to, work from this, like get results from the sweat of your brow, right? We've all been cursed since the original sin to do that. But AI automation, using animals, using machinery, has taken our hands, our energy, our presence from direct labor. Yes, I think there's a lot of things that we can use AI for, but it's not AI alone, it's AI with me. So, Microsoft's name to name Copilot as its AI is a very appropriate one, because that's how it works. It's my Copilot, it's my assistant, it's my intern. Yeah.
Excellent. I just watched before we had this chat. I just watched that AI has created in 2 hours the new star engine, basically, and they made it. They 3D printed it, and it just fired off, and it's just crazy. I don't even know what it can do in the future, and how it can help us and
Yeah.
take us to places, and cut the time to actually produce products and go to market as quickly as possible. It's definitely a space to immerse yourself in.
Yeah, very true. And I mean, and branding is not rocket science, and AI is being used, in rocket science now. So why
Yeah,
wouldn't,
there you go.
right? Why wouldn't? Yeah.
Are there any more questions? Cool. Sergio, do you want me to ask you more questions?
If you have anything else you would like to ask, why not?
Um, Maybe just one more.
Okay.
Um, we we haven't, well, you touched a little bit about this, and I know the brands and creativity can create trust, and this is a big topic that has been going on as of late. And I went to MD of Bunnings, Michael Schneider, at South by, and he spoke about Bunnings trust, community, feels like home. What's that role of feels like home trust in the brands, and especially in M&As? How do you sort of
Yeah, yeah. Look, trust, I mean, trust is everything, right? Without trust, any kind of transaction would become extremely costly because everything needs to be proved. Everything needs to be transparent. If I don't have trust, you need to show me everything, and I will keep questioning, and I will keep questioning, and I'll keep questioning until either you're not able to produce those responses because it's gotten too costly, or the relationship has completely eroded. So trust is still important, and trust is actually what I discussed last year on the breakthrough session when I sat on a panel about trust. So I'm just going to repeat a little bit of what I said last time because, again, the same issues are still present, beginning with the fact that people don't really understand what trust is, right? Trust is not something to be understood like in a really broad sense. Trust means, I'm trusted for something. I'm trusted that I can build a brand because that's what I do, but I'm not trusted to build an engine for a spacecraft because that's what I do. So you need, like, trust, it needs to be measured in relation to something, not in general terms. And once you're able to define what you want to be trusted for, or what you want to trust a person or an entity or a transaction for, it needs to be seen through the lens of three different factors, beginning with competence. Competence means, I have what it takes to get the job done, or this business that I'm buying has the capabilities to make my business stronger, to make 1 + 1 = 3. That's competence, right? The next one is integrity. I say what I do what I say. I'm not always, I'm not giving you surprises every 5, 10, 30 seconds. And if I'm doing that, I'm not reliable, I'm not trusted, the relationship is going to erode. So if you tell me that this is your valuation and I get a second, third opinion, and those opinions could be a little bit off, and that's normal. But if it's completely different, as sometimes happens, you have a brand finance, brand valuation report every year. You have Interbrands, best global brands report. You have Brand Z, which is a study from WPP with the best global brands. These are the three main ones. Sometimes some results are completely different, and it's very hard to trust. If I'm an investor and I'm looking at those reports to make an investment, that creates a sense of mistrust because where's the integrity? You're saying something, but you're showing something else, especially when you compare like that. And the last one is around benevolence or care, which is the human factor that that can also be shown in different ways through your CSR initiatives, through your ESG agenda, and other proof points that can demonstrate that. But fundamentally is about being able to have the competence, but not at the cost of everything else. I value my relationships. I value the people that work with me. I value the environment. I value other, intangible factors that allow me to produce my tangible results. So the combination of that, this trifecta of trust, is what is critical for businesses and particularly in M&As.
Thank you so much. Well, I think that would be it for today. Thank you for everybody. Everybody stuck around and listened to what you had to say around the power brand, and I'm sure we can talk another hour about this. There's a lot to dig in. Thank you for this. Thank you, everybody, for Friday, 1 p.m. and being part of the very last breakthrough session for this year. Have a great weekend, and we'll see you around, and this will be published very shortly.
Amazing. Thank you,
Thank you,
George.
Sergio.
Thank you, everyone, for coming.
Thank you.